What's good, YouTube? Back with another video. Today we're doing another interview, but this time we're switching it up. We're not gonna be talking futures. Today we're talking forex. I got Cash and Pips in here, from the infamous, I should say, I Am Academy. It's gonna be a good one. We hopping straight into it like usual. Let's get it. It's been good, man. I did an interview yesterday with Tony Trades, and I just been editing my videos, making shorts out of the longer video I made and just trying to get those analytics right, you feel me?
Absolutely.
So about you, bro, can you tell us a little bit about your background, how you got interested in trading and what made you choose Forex over, everything else that's available?
100%. 100%. So, in terms of that, I would say probably what gravitated me towards just investments and trading was like I grew up in a single parent household. So, I grew up with just my mom. So, we grew up, my mom always tried to have us in the nicest places, but where I grew up, it's kind of like nice spots and then the hood and then the hood nice spots, so it's like you can't really get out of certain areas, but there was a lot of times where I'm literally living in the middle of just places where the people around me are just constantly getting in trouble. Obviously, street life is
Right.
up.
Where you from?
I'm from Toronto, so
Okay.
I'm from a place called Scarborough. So like Drake, where Drake his homies
Man, them don't play up there, right?
like the people, his little guys that run around the city, that are from Toronto, like they're from the same like area that I grew up in. So over there, it's like it gets pretty sticky. Like I'm not gonna hold you, like when it comes down to the street politics, especially. So for me,
Right.
it's just about separating because my male influences were in and out of jail, so I had to be the man of the house and just really I knew what not to do from watching everyone fuck up. Is so I don't know if you cuss, but you
Oh
know.
yeah, man. It's free country, man. Say what you want, bro. Say what you want.
Yeah, I know some people get down, but in terms of that, it was just like it was crazy, right? But I
Right.
would say the biggest thing that got me into trading as a whole was my entrepreneurship mindset. Like I was what you would call a street pharmacist. That's what I was. This is what I was doing before I got into the trading. But really, I was only doing it to get money. I wasn't into the beef. I wasn't into politics. I was just there to make my
It's
money.
just all about the money, all about the profit. Yes, sir. Yes, sir. That's the way to be.
So for me, it was just about staying in my own lane, and then eventually, real estate was actually what piqued my interest first. But then I got involved with trading probably around the same time. So I started trading when I was 18. So fresh out of
Okay.
high school, I was a high school dropout, and I went to real estate college, dropped out of that, and then just started trading full time. So I would say that's kind of how my trading journey started.
Okay, so you full-time trade. That's all you focus on is trading now, huh?
Yeah. So for the last, I would say probably 2 years, I've been full time trading. I've been trading now for coming on. This is just the starting of my fourth year. So fourth year, second month, third month. So um,
Congrats, man. That's rare that, you know what I'm saying, you hit profitability that quick. You hop right in and it just, like you said, it's your lane. So you just took off, man.
no, absolutely. But it's not even like it was me figuring things out on my own. Like to figure this shit out on your own is like damn near impossible. It's just the people that I learned from. Um, these people literally were in the game for 5 to 10 years prior to me actually getting in contact with them. So it's like their 5 6 years of losses. I didn't even have to go through that because they're like, all right, if you just follow this game plan, they didn't give me a timeline, but what really took them 4 or 5 years took me a year. So by my
Right.
second year, I was going crazy. So it was like me and a couple of my homies out of the city. And the thing that really changed it for us was probably me and my one business partner. We took a bus ride. So we were broke. So when we first started, basically I came in with a lot of money. I saved a lot of money from the streets. And when you first start trading, you get giddy because for me, I come from a gambling mentality. I used to
Right.
dice for my lunch money, so I used to go play some CeeLo. I used to go dice it up. That's how I used to get my lunch money when I was a kid. My mom used to give me $2 to take the bus to go to school. I used
Right. And you use it to come
yeah,
up for the rest of the week. Yeah.
man, fuck that. I'm walking to school and I'm gonna use this $2. I'm gonna either go buy me a patty with cocoa bread. I'm gonna go dice up and I'm gonna go try and get some wild wing today. I'm gonna go try. You know what I mean? So
Yes, sir. Yes, sir. Real hustler. Real hustler from the jump.
little kid mentality, and I would say that that bus ride shit we took a 72-hour bus ride from Toronto to Dallas, Texas, and I linked up with the people that were really putting me on to game, and from that point, like the rest was history. Those guys put me on my first flight. Like they took me, and like it wasn't like it was just me. It was like they had a house of 20 people, bro, and it was just like they weren't even the type of people that were like drip down. Like I'm used to like boom, Cardis, watches, chains, all that. Like I'm sure you probably grew up in the same environment where like the hood trophies, right? Those are the hood
Right,
trophies.
yeah, it's all about being flashy and showing off what you got.
But these guys put me onto game to the point where it's like, boom, I started buying things like this. Like I got silver coins, right? So I got
Right.
so
At
it's like
things that have actual value.
I have bricks of silver. So I was 18 years old buying bricks of silver when people my age are in the club, they're popping bottles and they're looking to do dumb stuff. So I just got influenced at a young age, and I knew that these people had the things that I want. So it was just a matter of following the crowd that was successful. Like if you were closed-minded or if you were projecting your negativity onto me, I didn't want to be around you, because to me it's like I don't have time for that shit. Like I have people that
Right.
are relying on me. My mom's relying on me. My brother's relying on me. So I would say, yeah, that's what really kind of got me to that point.
So the people that you learn from, having a mentor is so powerful. In my DMs, we were talking about I Am Academy. Were you a part of I Am? Are you still a part of I Am?
So I Am Academy is definitely a place where there's just an abundance of resources and tools. And really what I feel like the misconception is, because I have nothing but good things to say. Obviously there's bad things about everything, right? But it's just about
Right.
perspective. I feel like it's about the experience you have. So I feel like for the most part, my experience without the company, I wouldn't be in the position that I'm in, because my mentors they put me in a position where literally I was teaching on the platform in my first year and a half. I was the youngest paid educator on the platform. And it was just something that I got put into positions just because of the people that I knew. So it wasn't necessarily what I knew, it was who I knew. So I would say that it's a good resource if you're connected with the right people, though. So I feel like a lot of people sometimes they categorize the whole company as something that just unbeneficial, when it's like they had a bad experience with maybe one or two people. And to me, it's
Right.
to each their own. Like I was with that company for over 3 years, right before I finally took a little bit of a break. And for me, it was just more nothing company related. It was just more politics with individuals, and it was just draining, right? I want to be in an environment where it's just people are focused on really winning and really helping people, not just like, I'm sure you've been in the industry long enough. You've seen all these people that are capped. They're on social media talking about, I want to help these people.
Yeah, and they're more focused on getting people, to sign up for their Discord, or what I'm saying, pay for their mentorship, than actually helping people elevate.
Yep.
And it's I'm glad that you said that, because there are so many people with misconceptions and horror stories about IM, but in reality, IM is the gateway, what I'm saying, to learning everything that you need to learn, to where you don't need anything else. And so big shout out to IM, dog. Like the people that are in it and run it the right way, they will 100% change your life. So moving on, do you only trade Forex? Is Forex the only thing that you're into?
So with the way that I learned how to trade, it's a little bit more broad. Like the method that I learned on the charts is like you can apply it to crypto, stocks. So for me, I don't even really deal with Forex. I deal with commodities and indices.
Okay.
Like for example, today, on like in a couple of my team chats, I called out some gold shorts and I called out NAS 100 shorts. And we were able to, in NAS, we were able to catch a 1 to 10, 1 to 10 risk to reward.
Yes, sir.
And
Yes, sir.
on gold, I think it was a 1 to 7 where our first target was, but we actually had the top of gold from the beginning of the week that's riding about a 1 to 20 right now. So risk to reward is something that I focus on. Dollar amount is cool, making money is cool, but I feel like for the average person coming in, it's like they don't realize how powerful making $5 off $100 account is if you can do that consistently. And
Right.
I feel like that's the goal. So yeah, when it comes down to trading, I love crypto. I love volatility, truthfully. If it moves fast, to me, I like it. People that are scared of the volatility is just because they don't have a plan and they don't have discipline. So it's like if you're scared of the markets, is either you need to learn something or you just need to stick to your plan to avoid just common errors like over leveraging, not managing your risk correctly, not knowing when to take profit is probably one of the biggest things I feel like traders struggle with. So I feel like being disciplined is probably one of the biggest things, but I like the volatility. I don't like to sit there and, for example, like a UJ, I'm not like a wait 10 hours for 40
Right. Yeah.
like
Okay.
for me, gold, we caught 100 points in literally like probably 2 30-minute candles today, right? Entering on the 5 minute, but this was an area that we were looking at yesterday, and it was literally no drawdown from when we caught gold and NAS. So I feel like accuracy is just important. Entries and exits are more important than money. It doesn't matter how much money you're making, because you can be making 10 racks on the demo, but then you go to the real account, you're blowing your shit, and you're like, damn,
What's the difference? Why am I not winning anymore? Yeah. So how do you approach risk management when you're trading with high volatility, commodities like gold and what strategies do you use to protect your capital?
So really what I do is I focus on just capital preservation. I feel like the most important part is not risking too much. So for me, I kind of have a little bit of a threshold in which instead of like most people will sit there, they'll risk 1%, but it's like they don't account for things like slippage, like for example,
Right.
or they don't account for spread all the time. And if they do, slippage is something that most people don't. So for me, I kind of always am on the safer side because I've been burned so many times with slippage from just being on the wrong end of trades. I'm like, it's always better to be a little bit safer than sorry. Like I'd rather stack my positions instead of just putting on, like, let's say for example, for me to get on my full 1% of my position, I would need to drop a standard lot. Like instead of just dropping one standard lot, I would rather break it into a 0.25, and sit there and scale into my entry based off of the area and just
Right.
monitor the reaction to see, okay, is this even what I'm looking for in terms of reaction? If not, all right, boom, I'll take the small loss, wait for it. Cause like today, even for example, I took a small loss, but it's like the strategy that I really, or one of the things I tell my students all the time is there should only be four outcomes when you trade, right? First outcome is small win. Second outcome, small loss. Third outcome, break even. Fourth is big win. So nowhere in there is there a big loss, and that's because if you follow risk management, you'll never, ever, ever, ever have a big loss. So you only have a big loss when you over leverage or you just risk too much capital.
Right. Okay. 100% true. 100% true. What advice would you give to someone who is just starting out in trading and wants to be successful long term?
I would say lock into mentorship where it's not just people that sit there and show you, oh, I made 5, 10K. Like lock in with somebody who can show you like how they got into the and how they got into the move. Like follow somebody that has the results, can show you how to do what you can do. Because one thing that I was taught was you give a man a fish, you feed him for a day, you teach a man a fish, you feed him for
You
life.
feed them forever. Yeah.
So a
Don't
lot of
you don't you actually have your own free Discord and like
yep,
free
free
video
Telegram.
collection training?
Yeah, on YouTube. So I like to give away as much free content as possible because some of the individuals I study, like Earl Nightingale, right? He's somebody that talks about just what you put into the universe, what you put into the world, is going to reflect back into what you receive. So if you're not willing to enrich others, you can't expect to enrich yourself. So it's just a few principles, laws of the universe. It's just spiritual stuff. You see what I'm saying? So it's more
Okay.
than
Okay. You hip on that Earl Nightingale. I hear you. I hear you. So what do you do? Like, how do you stay up to date on the latest news and trends in the market? What sources do you rely on for your information?
so I'm grateful to be tapped into a network where, like I said, it's not about necessarily what you know, it's who you know. So I just know the right people. So for the most part, it's like if you ever read the book Rich Dad Poor Dad, right? Robert Kiyosaki talks about having a rich dad and your poor dad. So for me,
Right.
my rich dad, quote unquote, who kind of puts me on all the game, and really just teaches me the way. He is someone that really is just enhanced just like my whole perspective on just everything as a whole when it comes down to just not only trading, but just how to move as a whole. Because like I was telling you earlier with the whole hood trophies, it's like, this guy showed me when you make your first bag, it's go buy silver bricks. He was showing me 100-ounce silver bricks in 2019 when silver was $11 an ounce. You go look at silver right now, it's a lot more than $11 an ounce. So it's just
Right. Facts. That's a huge. Do you have one of the bars with you? Like,
I don't.
did you?
I have all of mine in my safe, so I have it in a safety spot.
Oh,
So
true.
that's why I was looking around because I actually normally do. I keep a kilo or I keep like a 5 or 10 ounce just so I can show my students. But all I have right now is literally this one is probably one of my favorite ones. One of my mentors gave me this, but this is a 1 ounce silver coin, but it's a Bitcoin. So it says
Right.
has a Bitcoin logo, and then it says on the other side, "In code we trust." Right.
Yes,
So
sir.
I think that's pretty dope. And then the other one over here is a Black Panther limited edition. The Mint from Canada actually released this, and it was at the time I bought it for about like $20. Now resale because it was a limited edition Black Panther, and obviously everything that happened in the world since then. It's worth like probably 6-7 times that now, and so it's little things like I gave my
And
baby brother,
it's only gonna keep going up too.
exactly. So I gave my little brother, like he's 15 years old. I gave him a coin, and I showed him 2 years ago. Yo, it's $20. Watch what it's gonna be. I showed him the other day. I'm like, yo, your coin's worth $100. He's like, whoa, should sell it. So
Yes, sir. So trading, we try to keep our emotions, in check. So what role does checking yourself play in your trading? Like how do you keep your emotions out of your decision making?
Well, that's a good question because I feel like this is what most people lack in their trading plan. I actually have a section in my trading plan that is dedicated just it's a mental checklist. So it's like there's certain things that I will and will not do before I enter the market. So for example, like if I'm gonna go even look for an entry, I'm not gonna be looking for an entry based out of the sole fact that I just want to make money. It's gonna be out of fundamental analysis. If I'm going through personal things, for the most part, I don't even trade because I've lost a lot of money. Just emotions. When emotions become involved, it's like there's a whole different ball game, and then now you turn one situation that wasn't so bad into a situation that's now even worse, and it's like you can dig yourself into a hole real quick by mixing the emotions. So one thing that I did to kind of alleviate that pressure was study a lot of philosophy and a lot of stoicism. So stoic philosophy is something that I really spent a lot of time just going over, and even individuals like Jordan Peterson, he's somebody that I really like a lot because I feel like he's so cynical with the approach. It's like life is suffering. It's anybody that doesn't think life is suffering is just delusional because it's like most people, their goal in life is to be happy, for example.
Right.
And when your goal is to be happy, I think that's a bad aim in life because if your mom dies tomorrow, you're not going to be very happy. So how do you manage and how do you push through and get through when things don't go ideally the way that you want? So I think the goal should just be to be just a monster, but it's like not a monster in a way where you're hurting people. It's like you want to be that good monster. You want to be that positive monster. Like you want to be that guy who looks so scary and so big and bad, but when you come up to people, people are like, damn, that's the nicest person I ever met. This person will take his shirt off his back and give it to the next man. So I feel like it's just about giving as much as you're willing to receive. But yeah, like I feel like I kind of got a little off topic, but
Nah, bro. That's exactly what I'm asking for. Exactly your thoughts. You feel me? So, how important is having a trading plan, and what elements should a good trading plan include?
So one quote that I just religiously go over in my head is the ones who fail to plan to fail.
Plan to fail. Okay, that's fast.
I really think that if you don't have a trading plan, you're already like, okay, so think about this. If you just hop in your car right now and you start driving and it's like, you don't set an aim point on your GPS, like you're trying to go to a spot you've never been to ever. So it's like, where do you live, for example?
I live in Florida, Panama.
Okay, boom. So let's say you live in Florida and let's say you're trying to go to motherfucking Venice Beach, right? So it's like, there, if you don't know your way around the town, it's like you might get lost just sitting there just driving aimlessly. So it's like I feel like in life people approach trading without no GPS. They don't have no end goal in mind. So it's like they never know when's enough. They sit here and they're like, all right, when it gets to 100, I'm gonna close it. Then what happens when it gets to 100? Oh my god, when it gets to 300, now that's it. And it gets to 300. So that's the second chance that they got. They're like, no. 1,000. I'm about to have 1,000. Then they come back in 3 hours and then stop loss hit. Now they lost $700 and they're sitting there tight.
Oh shit, that's facts. Because without the GPS, you're just lost. The only place you know where to go is back home. Literally.
So I think that in terms of what you should have in a trading plan, it's just fundamentals that work for you. Like I feel like picking a strategy that works for you. Like I know the way that I trade, a lot of people are just not exposed to that information because it's just like it's very hard to find people that know what they're doing, first of all, and then second of all, it's just like it's the results speak for itself. Like I've personally been able to impact over thousands of people worldwide. Like I said, I was the youngest paid educator on the platform that I was partnered with, and that platform literally had just under 500,000 students. So it's just like when we put that into perspective, it's just like there's a lot of value that is in the education, and I feel like you just have to make a trading plan based off what works for you. Some people are impatient. I know for me, like I said, like we discussed earlier, I'm not a UJ, I'm not a U chef type of trader, but
yeah, you're just more in and out with it. Yeah, just trying to.
I don't knock anyone that does. It's not to say I can't mark it up and I can't have a fire analysis. Like I could go body U chef, I could go body anything that I want, but it's just like I feel like Bruce Lee said it best, right? He doesn't fear the man who practices 10,000 strikes once. He fears the man who practices one strike 10,000 times. So it's mastery. So I just feel like it's putting your reps in, right?
Right.
So
that's what it's all about. Repetition equals perfection. You know what I'm saying? Yeah. So I'm not sure if you saw my other interview, but I like to do my things a little different. So whenever I bring somebody on, I always give them these last 10, 15 minutes to, pull up their chart and do a little market analysis. You cool with that?
Yeah, 100.
So all you gotta do is hit present, and it's gonna let you share your screen.
Okay, perfect. So would you like me to go over something that I'm looking for, maybe leading into the beginning of the new week?
Yes, sir. Yes, sir. Let's do it.
Fire. So share screen. Boom. So you should be able to see the screen now, right?
It's coming in. Yep, there she go.
Okay, perfect. One thing too that I just want to kind of pull up as well is just because obviously you can see the markups on here, so I'm going to clear it out and I'm going to go like top down for you. But basically what I want to do is just show you the gold entry that I was mentioning to you just a little bit earlier when we first initially hopped on the call.
Right.
So let me just share that screen real quick. So in terms of that, if we look at just the area, like I had called it out a little bit earlier. This was like the most recent screenshot just because I was updating them. I was telling them, all right, we're approaching the area from our Sunday call, but basically from like when price action was down here, what we were really targeting was just some insufficiency that we had in the market. We had a little bit of imbalance. We had some liquidity targeted right there. So this is the markup. Obviously, you can see we have the area. You could look at the side just to confirm like the area, obviously, because I'm going to show you the after. But
okay,
realistically, we were able to sit here and embody this. So looking at this, like I said, currently floating. Like I'm anticipating right now, based off of seasonality on gold, for us to continue to the bear side. So I really just go to another chart. So basically, the way that I like to start off is on the higher time frame. So for the most part, I don't like this broker. We're gonna use Oanda. So in terms of what I really like to do, I like to start out the daily, weekly, and I like to just analyze just a few things. Like there's a few confirmations that I use on the side. Like DXY is gonna be one that I'm gonna use for directional bias. I don't really like. A lot of people sit here and they get bodied because they try and follow DXY exactly. So if DXY is going up, they're like, okay, gold has to be going down. But sometimes they'll see like they'll be doing the same thing, and it's a matter of like, okay, which one is going to win, right? There's a lot of divergence that occurs. So for the most part, what I like to look at initially is the seasonality of the chart. So what I'm going to do right now, and put you guys on some game if you're not already hip to this, but I need to make it so I could share. Sorry for like keep I'm going to make it so I could just share the window because I think that's where I keep fucking up. All right, perfect. All right, so now I think you can see the whole window. So basically now what we can see is equityclock.com. So this is what you're going to use for just seasonal bias. So a lot of people don't understand that really in the course of the year, there's really only going to be 2 or 3 like significant moves in terms of like the market is really only going to reverse on like long term 2 or 3 times the whole year at most, like maybe 4 times, but it's like it's not going to be sitting there and like I'm talking like we're going to sit there and go from bearish to bullish like 3 or 4 times the whole year on a higher time frame. But in between that, it's obviously going to be a lot of up and down, consolidation, whatever the case may be. But if you go to the second page, what you're going to find is gold. But you can basically find the chart for everything. Like you can see coffee.
Okay, pretty much all the futures are on here, huh?
Everything. Frozen concentrated orange juice, soybeans, frozen pork belly, live cattle, like literally everything. So this on the second page, you're going to find gold. And basically, one thing that I like to pay attention to is just the seasonality. So even, for example, a trade that I'm currently holding right now, I'm holding entries from 1700, right? And obviously, gold right now is at 2000. So
yes,
the reason why I've been able to just swing those trades and hold them and be able to have such high risk reward is because I understand that from about December, right, to about March is when we're typically going to see just bullishness. So I know that right after Christmas is typically where we're going to see bullishness leading into Valentine's Day. So there's just certain fundamentals that I've been taught by my mentors, like I said, that I've just really instilled. And this is how for like the last 2 years I've been able to actually catch seasonal moves. So when we sit here and we look at the overall bias, right, we can see that on the daily time frame, we just came into a significant area. So we really just came into this high from March. So the reason why this area is significant is because this is really the highest we've been since I think like 2020, whenever we made this high.
Right.
So what we did in the process, right? Understand the way that the market works and the way that the market is really just attracted. Like, you ever see times where like the market just like literally impulsively like it just pushes up and then reverses? It's like it's because there's certain pockets of money that are just in certain areas that in order for the market to go up or down, there needs to be money behind the move. So it's kind of like betting. Like if you're familiar with sports betting, it's like
right. I ain't gonna lie, I just put 500 on the Knicks.
Yeah, you
Yes,
500. Yeah,
yes,
so
sir. Yes, sir.
for me, I put my parlays in for today too. So it's just like it's man. I got rinsed yesterday with Philly. Oh man, I ain't gonna talk about that.
That's a whole other video. That's a whole other video.
I was about to say. So in terms of this, right? What I really was excited about when March, right? In March, initially, what we did was we captured the liquidity from most of 2020 to 2021. So liquidity is just going to be areas where there's money. The reason why this area has a lot of money is because when we look at it from the perspective of like the average retail trader, most people trade with support and resistance, M's and W's, head and shoulders. It's like that stuff is cool, but there's a reason why 90% of traders lose. It's because they follow the same concepts, the same patterns. So what really we have to pay attention to is, okay, this looks like, you know, a retail, trend line, head and shoulders. You can identify multiple patterns within this whole area. So what we have to identify is if people are entering in these areas all in here for shorts, where their stop loss is going to be. Their stop loss are going to be right above. So stop losses are going to be resting in these areas. So what I mean by the market needs money, they need orders in order to push the market up or down. Basically, the way that contracts work is when somebody's stop loss gets hit, they're basically just swapping contracts with someone else. So it's like when your stop loss gets hit, someone else is just basically buying or selling in at the area that your stop loss got hit. So that's what people fail to realize. People don't realize that even their stop loss for sales might be right above this line, but they don't realize that some people might have sell limits set in here, right? So there's orders pending in that area. So what the market will do, will try and hit the stop loss of as many people as possible. So it's kind of like sports betting where it's like, you know, like the favorite. It's like everybody thinks this team is good.
Everybody's on the favorite, and then it starts looking good for them, and then, you know,
the underdog ends up coming back in and they win by 20. And then it's like, if I took the underdog, I would have made way more money. But it's like they get you. So it's very, very similar in that sense. So another thing that really, one of the market confirmations that I use is Wyckoff. So I don't know if you're familiar with that. So if you're not familiar with Wyckoff, right, this is a tool. Like I said, I like to put people on game. So to me, like I said, it's not about benefiting from anything. Like the thing about me is like I'll really put people onto anything because I know most people are not even gonna like look into it. So to me, it's like, all right, cool. Whoever looks into it, they'll really come back to me and they'll be like, yo, like that was some shit that you put me onto. I'm like, you're telling me. I'm like, here's what's next. Here's what's next. Right. So in terms of this, it's all about who you listen to. So one individual that I listen to, Kevin Trudeau, right? He's one of my mentors that really has taught me a lot when it comes down to the mindset. And it's all about who you listen to. So you're obviously familiar with JP Morgan, right? Everybody familiar with JP Morgan Chase, right? The banks. So in terms of that, what people fail to realize is that individual played a massive part in terms of just the fundamental strategy that was really used for people that were making a lot of money at that time. Because in the 1920s and 1930s, they weren't exactly able to go on their MetaTrader 4 and press an order. They had to go and manually type in all of this stuff. Like it was a different ballgame. So we're definitely privileged right now. But one thing to note, right? Richard D. Wyckoff, the reason why this person is important, because if you, like we said, who did we just talk about, right? He observed market activities and campaigns of the legendary stock operators of his times, including JP Morgan and Jesse Livermore. So if you pay attention to those two names, right, like I said, you follow the money. So you understand who controls the money. Those people control. JP Morgan Chase moves 7% of the liquidity in the $7 trillion market per day market. So this is what we have to understand. If this guy was right beside JP Morgan, I want to know what he knows. So this is
Right.
something, like I said, this is something that you can learn for free, right, online. And like I said, it's like, that's what mentorship is important, because it's like there's certain pieces that you need to get added to the puzzle in order to make it fit. But this is one of the starting pieces. So this is going to be the piece that makes you say, oh, I can kind of see it a little bit. So the market really only works in two phases. So accumulation and distribution. So in accumulation, where we're going to be typically looking to get in, and this is why my risk reward is so high, my students are able to duplicate the same thing, is because we don't get in phase A and phase B. And this is where a lot of the time you see the choppiness, the consolidation, the M's and W's, the head and shoulders, the support.
A lot of that sideways movement.
Exactly. So that starts to happen in phase A and phase B, when in reality, this spring, notice how this looks like a little bit of a support that starts to get developed. So people are buying off the support. It's going up, and then all of a sudden we wipe down, hit the stop loss of these people.
And everybody stop losses, and now it's time for the takeoff.
Now it's time for it to take off, right? So the reason why I was even able to catch that gold sell was because of the distribution. So right now I'm looking at gold as schematic 1 distribution. So the area that I called out on Sunday was really a test. So you see how in phase C, it says UTAD. What a UTAD stands for is up thrust after distribution. So this UT, that stands for up thrust.
Right.
So basically the up thrust after distribution is going to be the sweet spot. So phase C and phase D is where you're going to get those big, massive, like, continuation trades where you're like, damn, is this shit ever going to come back? Like, it's one of those ones where, like, you get mad when you close early because you're like, damn, I could have held that. And
you have more profit than I could have. Yeah.
Shoulda, coulda, woulda, woulda, right? It's that mentality that we have when we first come to the game. So when we sit here and we're able to have analysis like this, right? What I was able to do was base my analysis based off of this. I was able to then locate the area that fundamentally made the most sense based off of just the time frame that we're looking at, which is the 4 hour. So if we go to the 4 hour, I'll just label this up quickly, right? But basically, what I was looking at this to me was that up thrust. This over here was that up thrust after distribution. I'll even get rid of this. Right. So with this, what we have to sit here and now pay attention to is, okay, a lot of people would have felt like they missed this trade just initially looking at it from the perspective of like, okay, looking at it from here, they're like, oh my goodness, I missed it. But like I said, one of the confirmations we look for in terms of confluence with a few other things is just this up thrust after distribution. So what I know is that for the most part, we're going to get a test back at this previous up thrust area. So if we go back to talk about sports betting, right? So if we sit here and now we go back to the up thrust, what we have to note is, okay, this UTAD is over here. This up thrust is over here. So what I would do is I would take the body of this candle. We take the body of the candle because the body is where bulk of the money is going to rest. The wicks is not going to be as much liquidity, right? Just because the wicks represent just fast, quick movement. If you break it down, and obviously it's not a wick, then to me it'll be healthy. But the smaller the time frame you go down, the bigger the wick. That's bad for the algorithm, right? So when we sit here and we look at just this up thrust, this is where we anticipated price to come back to. But what we were able to do was line it up with a few other areas, right? So what I look for in terms of the market, like I said, liquidity, I look for areas of money. To me, this was an area where we had a lot of money, right? In terms of what I have on my screen too, I didn't even explain this, so a lot of people are probably wondering what the colors represent. The colors, this is the only indicator that I use, right? And this indicator is simply, it doesn't tell me when to buy and sell. It doesn't tell me when to do anything other than just when the sessions are. This represents each session. So the white is Asian session. The green is London session. This like middle, I don't even know what color this is. This is like New York crossover. And then this last like reddish pinkish part is New York. So that is the only like indicator you'll see on my screen. And that just simply represents the time. So I can't trade without it just because like I can trade without it, obviously, for sure. But to me, it gives me more confluence when I see this. Like when I'm on the road, it's like, and I don't have this, to me, like sometimes when I get back to my computer, I'd be like, damn, this was so much more cleaner. Like I would have dropped maybe like 2% instead of 1% just because it's like the only reason why I dropped
because of the time, the session. Okay.
So for me, what I pay attention to is fundamentally, right? We understand that the banks move 70% of the liquidity. When did the U.S. banks open?
In the
9:30.
morning, yeah, early morning, yeah, around 8.
So right here, this is when the banks open. So the bank opened, and notice how we went straight down.
Straight down.
So to me, what that tells me is there's a lot of people who caught the shorts the day before who are still holding, probably anticipating we're going to go lower. So for me, now I have a target of money right here because I anticipate their stop losses to be there. But what I also see is an insufficiency in the market. So I see an imbalance, right? So that's another one of the confirmations I look for. So what I would want to see at the very least is this insufficiency to get filled, right?
Mm-hmm.
Overall, what we want to see is us come and tap at least that black line, right? And see that potential push low, right? So now that we have these areas marked up and we just see how price obviously pushes and develops. One thing to note too, right? What we had on Wednesday, the reason why we even pushed up to this area throughout the week was because of news. We had CPI. So one thing that I was taught and really that I emphasize is news is always the excuse, right?
Right.
The market is always set up like I knew gold was going to dump before it dumped. And it's just like I was praying that news would give us that re-entry because to me, I'm like, I know it's going to dump. It's just, is it going to fill this before it dumps or is it going to dump first and then come back up? So for me, I was just really praying that we were going to get this fill and that CPI was going to be the excuse on Wednesday. And if we notice what ended up happening, right? CPI was at 8:30, right? We noticed, or it was at what time was CPI? I think like 8:30.
Yeah, like 8:39.
So boom, right at 8:30. If we go here now, we go to the 30-minute candle. Notice what happened right at 8:30. 8:30, we make this quick impulsive down, push to the downside, right? Then boom.
Then right back up to that UT.
We work ourselves up and we stop right before it. So notice how a lot of people probably would have sat here and they would have gotten into the market because they would have been impatient. But to me, all we did now was we induced more sellers into the market. They're like, hey, it came back to the same area as yesterday, and now it's going back down. So now to me, this is an even bigger pocket of money. So the pocket of money is not just over here now. We almost create a new pocket of money where it's like now we have new sellers who are getting into the trade. Because think about it, like people didn't just sell in there, right? People sold in here, people sold in here, people sold in here. So people are selling in all of these areas, are getting a little bounce, then they're getting trapped, right? And if most people don't follow risk management, why? Because most people don't have a plan. So most people are going to hold the drawdown with the anticipation that's going to come back, right? And then what ends up happening, right? The market pushes down, gives them that hope, right? Or this was Tuesday, so this was Wednesday. So boom, Wednesday.
And then right back up there to that line.
Right?
Just took out every seller.
And then starts to make its way down. And then what ends up happening afterwards, right? We always come back. So this is where people feel like we're like, oh my gosh, I missed the entry, this, that, and the third. It's like, to me, what we feel immediately, this is sufficient enough for me to see us continue to go lower just based off of what I like to look for. Breaking it down smaller, yeah, there's really nothing too much more that we would have to fill. The only thing I could potentially see besides that is us pushing deeper into this candle, maybe tapping this, right? So you see how this wick right here tapped the open of this candle. So I would look to see maybe us push back into that candle again. But let's see what ends up happening here. Right? So boom, fractal. Everything is fractal. It's like being able to scale in. It's like, boom, even come back higher. Yeah. So this is what I figured. Normally when we do this on news, what we're going to do, right, is think about it. People who miss this initial push are going to get back in here. And if they miss that, they're going to get back in here. A lot of people are going to sit here and they're going to miss this.
Right.
Right. When in reality now, I guarantee you, I'm pretty sure I saw a 15-minute insufficiency. So if we go back, even. It might have been on the 5-minute. Yeah, so there was a little smaller insufficiency there. But like I said, for the most part, it's like the way that we fill is clean, right? Because even if I get rid of everything now and just look at this again, it's like initially the same type of deal happened, right? What we end up doing is we create more liquidity. We sit here and it's like, boom, we create more highs, more targets. So what I was really anticipating and what I wanted to see, and this is really what I'm looking at potentially for like next week, right? Is this. But initially what I was looking at was, okay, I wanted to see if these highs could get filled, and just based off of what price did, right? This was Thursday, so this was yesterday, right?
Right.
Push back up. We filled, we just missed that area, right? And then what did we do? We ended up pushing down.
Right back down.
Dumping, right? So immediately, right, seeing this and just letting price play out on Friday, we can see like, wow, like we really got a lot of movement. But notice how, like I said, right at the beginning of this New York session, boom, we drop. But this is not really New York. This is the New York crossover. So this right here,
Right.
like towards the ending of it, this is really where the bulk of people are trading. So think about it. Most people are probably looking at this like, damn, this is a support. Let me buy this support. Right? Price keeps bouncing off of this line. Price keeps bouncing off this line. Price just dropped a lot. I don't know why people, that's a beginner trader's fundamental. It just dropped so much. It has to go up now. Like, you see what I'm saying? So it's like, that's the type of mentality people have. So we let price continue to develop. What do? We tap that line again. What do? We keep inducing buyers into the market. We keep inducing more buyers. So to me, what I really started to look at this as is liquidity. So I'm like, okay, we have these equal highs here, right? And what we have right above is this insufficiency. So we have
big zone of interest.
We have this imbalance in the market, which to me is like a glue point, especially with these equal highs, these little equal highs that we started to develop in there, right? So ideally, what I'd be looking for was that push up there. So that was the entry that really I was looking for, and I called out today for my team, and you can see how boom, it's fractal. As soon as we take this low, what ends up happening? London session starts. We push a little bit lower, right? So most people are probably thinking now sells, right? So they're trying to sell it.
Right.
And people are telling me
just like sports gambling, it turns right around.
Literally. So boom, ends up pushing up, and this is actually where we caught our entry today off of XAU USD, right? And you can see it really came back to the same area and virtually just kept pushing down, right? So where the market ended up closing, right? Ended up closing exactly where it's at. So right now, leading into obviously the new week, what I would really be anticipating for the most part is bearishness. So I really do want to see continuation to the downside. To me, at the very least, I want to see a fill here. Meaning like I would pay attention to this for a reaction. I wouldn't really buy it unless we got accumulation. Just because in my eyes, this right here is just a lot of, this is like a crazy amount of liquidity. Like we're not just gonna like push through this. Like we're gonna like it's gonna be a big candle through that. So for me, if we were to react out of here, then to me, this would just be a target for later on in the year. But if we don't react out of here, I think we're truthfully this is gonna be the start of a big shift in metals. Because observe the masses, do the opposite is one thing that I've really been taught. So what you've been hearing in the news is US dollar is going to trash. Ooh. Yeah, people are stupid. They don't understand how to read the chart. People that are uneducated don't know how to read the chart are saying that. For me, I think the complete opposite. So I think that right now it's going to be the opposite. I think US dollar is actually going to continue to go higher for the next.
You think the dollar is going to continue to get stronger throughout the year?
Yeah, I don't know about for the whole year, but I know at least for the next month, next 2 months leading into the summer, it's going to be very strong. To me, after that, it could definitely flip, and to me, it would make sense. But it's going to be very impulsive. It's going to be quick. It's not going to be like a long duration for it to move all the way up there. But really what I'm looking for right now in terms of entry points is kind of similar area. I personally think right now we're still going to fill higher into this. I think this was kind of debate for us just based off of the reaction. So for me right now, what I'm currently looking at is some along the lines of this. I want to see us come back into about 2023, 2024 area. And like I said, first target would be about 1989. So depending on how you scale in, depending on where you scale in, if you're able to get in closer to the top, I'd be risking like literally maybe like 20 points, 30 points at the very most, 30 at the very most. Like I don't like to have too big of a stop loss. I don't like to have tight stop losses, but I like to get into areas where I can have at least, like, to me, first target 1 to 13 basically. That's not bad. I ideally like to look for a little bit higher. But like I said, this is where I'm anticipating for a reaction, but realistically, I'm anticipating these lows to get took. So I'd be looking closer for 1 to 20, right? So about 20-point risk for about 600 points to the downside. That's really what I would be looking for. And I think we're going to get a continuation. US 32, what I would expect is the same thing. Today, I didn't short it just because it didn't come into my area. I wanted it to come a little bit higher. We have an insufficiency up here. I want us to come back, and now we've kind of generated a little bit more liquidity in my eyes. So I like it even more. This to me, high of New York. This is the high of yesterday. So basically, to me, I like that internal liquidity that we generated throughout the last two sessions. So I think that there's a lot of people that are going to get swept out in terms of that. Nasty Nas, one of my favorite things to trade. I love trading Nas. We bodied Nas today. We actually caught Nas up here.
Okay,
Right.
big move.
So on the 15 minute, it was nice. It was basically 9:30. We caught it. Literally like done for the day right at 9:30. Caught that wick. A lot of my students caught the same move. And this box right here was our target. So this is where I told them, I'm like, yo, this is where I'd be looking to take profit. So hit the beginning of that area. But basically what I was anticipating was once we got to this area, I'd be looking for some potential buy scenario. So we did actually react fairly nice out of this area. But for me, I took profit on most of my shorts. I still anticipate that we're actually going to break down a little bit lower as well. So for NAS as well. So basically for the indices, I would anticipate probably a push up to start like the session and then a continuation lower. I don't think that we're going to get too much bullishness. I think right now we're going to sweep a lot of liquidity on the downside. So that's personally my bias on like the indices and gold. And gold, I know I broke down a little bit more in detail just with what I look for, but for the most part, I like to keep it simple and sweet. Like I said, I don't have a lot of lines. I don't have a lot of stuff. It's like I have the money on my screen. I have a box. And then for the most part, it's like when it gets to my box, I'm looking to see what it did to get to my box. And if it's healthy, if I like it, I'm going to take it. If not, then I'm just going to keep pushing. So.
And there you have it, folks. That's free. That's 46 minutes of free game with Kash, bro. I appreciate you for getting on and sharing all this knowledge, bro. I have no doubt in my mind that the viewers are going to be able to take some value from this.
No, 100%. I appreciate you again for having me on here again, brother. I look forward to collaborating with you again in the future.
For sure, bro, for sure.
For sure we got to tap in, but yeah, brother, thank you again, and I look forward to just being in contact. And like I said, I can't wait to see the growth in your channel, your podcast. May God continue to bless just the growth, and I know you're going to do big things. You're
Amen.
very open-minded, very humble, it seems like. So keep doing your thing, brother. I'm excited to be in contact.
Appreciate you, Kash, man. I'm gonna link in your free Discord page, your free videos, so my people can get to that and take it, capitalize on the free game you putting out, bro. Keep doing what you're doing. Peace, bro.
I'm gonna post your stuff on my IG too, family. So let's run it up. Take care.
For sure. Let's get it.
Peace.